Hello everyone, and welcome back to the channel. Today, we're diving into a fascinating and somewhat alarming topic: the potential annexation of Canada by the United States and how it could affect housing prices here in Canada.
Donald Trump is making it crystal clear. He is not joking about Canada becoming the 51st state.
Canada and the United States, that would really be something. You get rid of that artificially drawn line, and you take a look at what that looks like, and it would also be much better for national security.
While admitting he has no right to do it, he said he'd use economic force to merge the countries, voicing his frustrations over U.S. defense spending and how much it costs to help protect Canada, while also making exaggerated complaints about the trade deficit.
But why are we supporting a country, $200 billion plus a year? Our military is at their disposal. All of these other things, they should be a state. That's why I told Trudeau when he came down. And I said, that's okay to have if you're a state. But if you're another country, we don't want to have it.
Trump also made multiple threats to upend the Canadian economy, reaffirming his commitment to punishing tariffs on Canadian goods and saying there's no need for Canadian auto exports, dairy products, or lumber.
Now, while this may sound like a plot from a political thriller, recent statements by Donald Trump have stirred the pot. Let's analyze what this could mean for our housing market in the context of some key economic factors already at play. Despite recent mortgage changes aimed at helping potential buyers and the possibility of the Bank of Canada lowering interest rates, we can't expect too much in terms of rising housing prices. Why? Because unemployment in Canada remains high, and it's even worse in Ontario. Simply put, when people don't have jobs, they're not buying houses. Here's a graph from my previous video that highlights the unemployment rate alongside the Bank of Canada's interest rate trends. As we can see, even though the bank has started to lower interest rates, the outlook for unemployment is not promising. Over the next 6 to 12 months, we could see these numbers climb even higher. But there's another pressing issue that could make things even worse. As you may know, the Canadian government has been prorogued until the end of March. This means there's no one to negotiate with the U.S. on critical matters like potential tariffs. If this problem isn't resolved, the Canadian economy could take a significant hit. Higher tariffs would lead to more layoffs, reduced consumer spending, and yes, even more unemployment. The implications of all this are clear. If unemployment continues to rise and the economic situation worsens, housing prices could stagnate or even decline further in many areas. Even with lower interest rates, economic instability and job insecurity are powerful forces that dampen the housing market. So what do you think about this situation? Could the annexation of Canada by the U.S. really happen? And how do you think it would impact our housing market? Let me know in the comments below. And don't forget to like, subscribe, and share this video with anyone interested in real estate or current events. Thank you for watching, and I'll see you in the next video.